if I buy Frasers Centrepoint Trust REIT now, what am I buying for at this current price? There are three aspects, okay? One positive point, three neutral points, and one need to improve point. This video is to keep myself calm, think wisely, because amidst the loads of comments that I've observed in various group chats, depending on what you want to hear first, you can use the timestamps found in the video description. First, as always, I will declare I am still a shareholder, and recently I bought some more. What sparked me to document this is because it is an opportunity to review the results of all my REITs in my portfolio. And there's one more important precondition, which is actually my portfolio allocation I have underdeployed. So you may have a different background, right? That's why you might arrive at a different decision. But the key thing that I want to share in this video is more about the business operations and what are the things that got me to buy a bit more of FCT. Let's jump in. What's the first positive value that I bought is definitely the Tampines 1 AEI is completed, so it has a larger net lettable area, so means that more tenants can come in. The second aspect is the three neutral values that got me to bought FCT. First, 99.7 occupancy rate. I think it's good, but you might be thinking, why is it neutral? How I see is that my goal is to increase the revenue, and we only can place or staff a limited number of tenants into a finite space. So with a finite space, to increase revenue, the next way, which I call it the inorganic method, is to improve the rent reversions on a precondition that shopper traffic and tenant sales growth must be there. However, look at these highlights of FY 2024. Okay, just going to zoom into this one. We can see that the growth is nearing zero. So this is the one need to improve point that I have for my FCT REIT managers. Personally, I expect it to be minimally above zero, which FCT is nearing right now. And if better still, it's supposed to be a gradual one, so that each quarter we see that there's an increase in shopper traffic, there's also increase in the tenant sales growth. What's the point of knowing all this information? My intent is just to connect the various aspects of the whole business and identify one story, because at the end, I think as investors, we just need the information to know whether we want to buy, sell, or hold the business. You'll be thinking right now, but yeah, we can just keep increasing the rents, right? But if you're on the receiving side, if you were a tenant, will you remain at a retail mall where they keep increasing the rents but you cannot earn enough, right? Because that is what that business matrix shared earlier is showing. There's nearing zero growth rates for your shopper traffic and your tenant sales. I, as a REIT unit holder, I also want to maintain some fairness with regards to rent reversions, because this next point is very important. It is the portfolio occupancy cost. It is a metric that's published once a year. So you can see that across the years, it has always been kind of like stable at 16%. Because what this means is that for each dollar that the tenant earns, they have to pay 16 cents of their earnings as rental payment and turnover rent. So the question would be, how high can FCT keep having positive rent reversions? Second neutral point is Hougang Mall is going through AEI in FY 2025. It's a strategy similar to Tampines 1 because they are increasing the NLA, and that's one of the sure ways to improve FCT revenues. I haven't been to Hougang Mall before, perhaps I ought to visit it. If you live near there, yeah, you can drop a comment like how's Hougang Mall. Third is this biggest elephant in this video, it is the RTS, because my management placed one slide, right, to address this RTS. I am neutral on this point because it is a factor that's not within the controls of my REIT manager. That is, I can't control the legs of my shoppers, right? However, you might see it as a risk. So that's why for each investor, we see things differently with visibility of the advantages and the risks that will help us to make an informed choice. It feels that 2025 is going to be a year where FCT is going to run at 80%. Okay, and I have discounted the potential dividends from FCT to 11 cents so that I know my buying price. But in my thinking, historically it has always been 12 cents, but why discounting it to 11? Because I want to have a margin of safety, because this margin of safety allows me to make errors with my assumptions. But more importantly, this is the reason why I'm having FCT in my portfolio. And if you have FCT in the portfolio, you might want to consider whether this is going to be a strategy. I'll see you in that video.